Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day enjoying this bloodbath that we're seeing here so far. I hate to joke and laugh about it, but it's just kind of standard stuff in cryptocurrency. This is a little bigger than usual. We do have the US SEC suing Binance. It's kind of a big deal. So that is going to send some ripples here in the near future where the price action may continue lower because of that. That is once again a fundamental catalyst, has nothing to do with TA. But what we're going to look at here today is kind of just better and worst case scenario, kind of see where we're at, because we are testing that support range of 25,300. That is essentially that support. And what do you know? The candle wick came all the way down to 25,355. So what does that mean for us? Well, we're going to take a look at that and much more. So hopefully you can learn something here today. And of course, if you want some positivity in your life, consider joining our trading community. It's really an awesome experience. We're all talking openly about this here and keeping a positive, open mind here, of course. Also, obviously, you haven't benefited from the BINGX offer here, free $100 in trading, no volume or deposit required. That's beneficial for those who got impacted by the BITGET KYC issue here. So Canada, Europe, Oceania, US, and UK all covered under that. So what does that mean here as far as the Binance news? Well, in the big picture, it's going to send some ripples, right? But you got to recognize that Binance has been very compliant and that this is just kind of that initial fear, uncertainty, and doubt, and it should subside, right? It's not going to send us to the dark ages. But again, that's always been the big speculation is, what happens if Binance goes down? Well, I think the likelihood of Binance going down per se is pretty low, considering that they are very, 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 very transparent and clear about a lot of things. And I think the fact that they, full KYC requirements, etc., and that there's a lot of reasons why we don't have to worry, but that's just my personal opinion, right? I could be way off base there. But I do feel that, of course, that'll have a consistency here. In other words, we could see something along these lines here, because anytime you see, fear, uncertainty, and doubt, there's a lot of red to follow. So I'm not saying you should necessarily short, but I do feel like, if we lose 25,300, we could very well see that CME gap at 19,000 to 20,000 filled. Let's talk about that here, just kind of open it up for the dialogue here. And again, we'll just go ahead and spread this out over here. This is a CME gap back from March when we saw the price action drop really low. And of course, that was a case in point where it gapped up over the weekend and never looked back. Okay, so sometimes those can get filled. Statistically speaking, there's a likelihood of them getting filled, like 90%. But again, that likelihood is based over a large period of time. So are we going to see that? It's hard to say. We got to see what happens at 25,000 first. But just know that is a thing, and it's a very realistic possibility. Is it a probability? I do not think so. Once again, all sorts of craziness in the news comes out, different story altogether, but this is just one of those times where you got to batten down the hatches, consider dollar cost averaging. I had a limit order filled at right around 25,700, felt comfortable and good with that because I do feel like we're still close to the bottom. Once again, we'll see here. That being said, let's go ahead and take a quick peek here at some big picture stuff. So looking at the daily, what we want to do first of all is we're going to redraw out some new fibs here for us and kind of just see what's going on. We're going to remove the volume because we can see there's tons of volume here. In fact, we're going to take a look here at high block capital data in just a moment. Let me go ahead and pull this up here just so we have it. So we want to know roughly how low the price, how well the price could recover if it does, okay? Because it could continue lower, and if so, we'll reverse those fibs. But for right now, why don't we take a look at this here? This is just a stark reality here. Look at this liquidation data. Obviously, a tremendous amount of longs got liquidated. We closed a couple of our positions after taking profit, and thankfully we're still in the green. But honestly, it's not as much profit as we'd like because the fact that this had turned around, this happens. That's why you always got to have some nice stop losses in place. Try not to play it too loose. Obviously, depending on your trading style, there's different strokes for different folks. But as we can see, tremendous amount of longs getting liquidated here. We can also see the whales are starting to subside and retail is coming back into play. Not tremendous amount, but definitely something that's there. What's interesting here, though, is look at how many we have the same amount of longs open as the same amount of longs are closing. In other words, there's kind of this neutrality right now for long positions. So even though a lot of longs got closed out, we're not seeing a lot of longs kind of run and hide. They're not closing their positions. Probably because they got liquidated, but the bottom line is that we're seeing some folks, a lot more buying pressure, likely at the 25,005, 25.8 range, and the price is kind of slowed down at that level. It's a pretty strong shelf there with previous resistances, so I do feel like we're going to be in good shape. We can see more shorts closing today than opening, so that's also a good sign too. And we can just see here, again, the proof is here. There's a lot of craziness. In fact, let's refresh this just to make sure we got the most current and kind of see what that looks like. So if we take a look at the longs, obviously, we don't even need to explain this because it's just going to be, they're going to be in the red, right? And in fact, it's probably not even loading because it doesn't even know how to communicate that. We'll talk about that later. Honestly, it's not a big deal, but it is relevant to understand that a lot of longs at the 27,000 mark got liquidated pretty hard, and we had over what $1 to $2 billion in volume get come into the market or out of the market, however you will. There was a lot of movement, and there was a lot of that, a lot of selling pressure. Okay. I think you know that by now. But anyways, some interesting stuff on the back end. So let's talk about the RSI and the MACD here, kind of just see what's going on. Because when it comes to the RSI, it's important to recognize we've been under 50 for a little while. And since we've been there, we've had some difficulty getting past it, right? So for the last 5 trading days, we've been below this level, and it's considered to be a resistance level. So we want to kind of understand that this 27,200, 27.3, as I talked about previously, is still a resistance level. Okay, obviously. We can obviously also see that we are seeing a strong MACD divergence. Now this was starting to lose momentum, but it's significantly shifted here. So in truth, that doesn't matter too much right now because of what happened, but this does tell us that we're quote unquote bearish. But once again, it doesn't take a rocket scientist to figure it out, but you also got to recognize too, just because we had this dip doesn't mean it won't recover. Okay, it just takes longer to recover. So there's a good chance we're going to have to build a volume profile here at about 25.3 to 26. Right in this range here, there's a good chance we will be range bound between 25.3 and 26, just based on the simple fact that we kind of wicked down there and that we have so much volume in that area. People and traders are kind of shooken up right now, okay? And with all this fear and uncertainty, now it has to subside first. We have to hear some good news from the SEC or whatever the case is to be able to see that recover. Will we see that right away? Definitely not. Right, so do not get your hopes up. But once again, dollar cost averaging on the way down is probably a good consideration. Because once more, as we've talked about previously, with a strong resistance level here from before, with the price when it broke through that level, never looked back, but now that we're retesting those levels, there's a good chance we're going to see some more support. Okay, so again, when we take a look at the volume profile as well, there is a small amount of volume in the range that we're in right now. Okay, so we got to fill that gap, for lack of better terms, in volume. But you can see here that we got a decent amount of volume just below the current price action. So is the price going to drop to 20,000 instantly? The likelihood that's very low. We got a lot of buying pressure in this range, so I personally feel like the low 25,000 range is still the bottom. Again, I hope I don't eat my words later. I've been wrong before. That's absolutely how it goes, but I can tell you that a lot of these things here, this volume, is a very big thing that people do not tend to look at, and I think it's important to recognize that we're in decent shape here, but there's no doubt that we're going to spend some more time in this range to fill that void, if you will, right? Okay, so again, just something to note. Looking at the 4-hour here, we want to kind of recognize as well. Let's go ahead and remove this guy here. Let's take a look at some moving averages. Oh, really quick, just to go back to the daily on the moving averages. We do still have the simple moving average right there at about 23,200. So that is working its way up. And a lot of folks do use the EMA. That's also aggregating itself right there at about 25,500 or 25.3, 25, just the low 25 range, right? So again, some decent amount of support there at that level. Those moving averages are beneficial to understand. When we look at the 4-hour, we're well below the price action. It doesn't matter too much. Larger time moving averages are important in this case. So with us having that volume and that profile there at 25, the low 25,000 range, it's important to recognize we should see recovery here. Now, is it going to bounce hard? Maybe not, but we are very low on the RSI. And anytime we've seen the RSI come down below 30, just take note of this here. We see the price action tend to work itself back out. Okay, now granted it's not 100%, but for the most part you will see when the RSI comes down this low, the price is going to increase. Okay, so I don't necessarily say you should just go long and go hard, but at the same time, you probably have some success going long right now within reason to be able to get a little bit of profit. Okay, now again, it's not going to be sizable. We're probably going to have some resistance at 26 and 26.5 it looks like, but between here and there is more probability of the price just recovering briefly than it would be to continue going lower. Once again, really depends on the fallout from this SEC stuff. Okay, so take a look here at the MACD. We can see the price action coming down as well. I mean, there's really no doubt that it's just an abysmal market and it's not the best place to trade. I've recommended my traders in my community kind of just stay on the sidelines and wait. It's cool that we took some profits here recently. We closed out some other positions close to break even, and it's important to just kind of take your time and not get too hasty with the price action. If you can dollar cost average on the way down, that's great. I think I'd recommend that. But just say a large leverage position right now may not be all that smart. Okay, again, wait on the sidelines for confirmation. Speaking of confirmation, we have 100% green light to leave your shorts open, if you will. Here for our Ichimoku cloud, we've been below the cloud for some time. And since we broke down there, we're looking at a position where we have to kind of consider the price action can go lower. Okay, it will until it doesn't. All right, and that's just the way it goes. That's how trends work as well. And speaking of trends, I didn't touch on this, but just to kind of note, we do have this interesting little behavior. And what I mean by that is just say you remove this and kind of just look at this. This is somewhat of a bull flag pattern or bull pennant, because basically what happens is when the price comes up, it'll work itself into a downward channel. It'll consolidate at support, which we're kind of seeing so far right now, right? And if the price were to continue to build that support here, the likelihood of it going up from here is higher. Okay, so a lot of times when these flag patterns, they take a while to form, but the bottom line is that they always have a descending trend first, and they bounce off support a few times and then continue upwards. So we're going to want to pay attention to how many times the price can bounce off this 25.3 mark, and then again, try to stay above those moving averages and continue upwards. Just something for future reference to consider. Definitely, again, not saying that it's just going to explode, but I do think there's more likelihood of upside later than there is downside. I don't think we're going to see a CME gap at 20,000 filled. I just think it's a low probability based on how much volume we have in that range of 20 to 25,000. All right, last thing but not least, let's go ahead and wrap this up here with our TD sequential and kind of go ahead and see roughly where we're at. Now, we're only 2 hours into this continuation, so we literally have almost a full trading day left of potential downside. So all the more reason to just kind of hang out and try not to take any crazy trades. Once again, RSI is overextended on the 4 hour. It's a pretty significant indication that we will see a recovery soon. Is that recovery going to be dramatic? Probably not. But once again, if the dust settles, we're going to start seeing some recoveries. Between now and then, we can expect the price to stay where it's at or go lower. I do not feel like we're going to see much lower than 25.3. That is my personal opinion. It's been a support level I've talked about for some time, and I really think it's realistic for us to anticipate that being a nice support shelf. Okay, so again, we just got to fill that gap here right now. We don't have a lot of volume between 25.3 and 26,000. We got to get more volume here, which we're doing right now, and at that point, we'll be looking good. So my personal opinion, I want the price to come down just a little bit lower to 25.4, 25.5, consolidate at a level. It will be range bound for a little while between 25.3 and 26. We can just kind of do some range bound plays there. And then obviously once it breaks out in either direction, we'll be prepared for it, but we've taken profit between now and then. Okay, so cool stuff there in the overall sense of things. I know this kind of sucks. I hate seeing this kind of market because obviously it doesn't help anyone. I mean, a sea of red, granted, there's some people that are shorting, but most of the traditional traders are wanting to buy low and sell high. And that's just not the case right now. So just consider waiting. I think we need another 24 to 48 hours before we have some confirmation of this shift in momentum turning itself around. But again, if you want dollar cost average, not the worst idea. I think that you have a decent probability of the price recovering a little bit, but just know 26,000 is the key initial resistance level based on Fibonacci. And then if we break through that, 26.5 is a secondary support or previous support turned resistance essentially that we need to worry about. So if you're going to have profit targets, 26,000 even and 26,000, maybe 500 or 400, just so you can get in right before that resistance level turns the price around. Okay. All right. Hopefully this was beneficial for you. If you liked it, follow up, like, subscribe, follow that whole 9 yards. Also help us build we have a new Telegram community that we're trying to build out. Just kind of give you as much fundamental news as possible while we kind of wait for Twitter to pull their head out of their ass and give us back access to our channel. Because unfortunately, there's a lot of scammers out there and they kind of screwed it for us. So either way, regardless, we're working around it, trying to bring you the most relevant data. Link down below for our Telegram. Hopefully you can come and join us there. I hope you have a great rest of your day. We'll see you in the next one. Take good care of yourself.